Okay, good morning, guys. So today's on Thursday. Yesterday I took other trades, but I was not in the house. I didn't record it. I was on doing something else. So quick recap. Yesterday we were bullish. I'll show you yesterday's trade, but let me explain just this one. Shift market structure. First of all, it was taken by a week. So this is shift market structure, fair value gap, market come. I should have got my first entry at this with this candle, but I got in late. First of all, my first entry position was here, and then when the market was retracing back to this fair value gap, I got in again. Market came retraced until here. If just in case it could have closed above this swing high, I've closed my entry position, because in fact ingekuja kuchukua stop loss yangu. So market came back, did this time distortion, and then at around to 117 started rallying down, forming volume imbalance here. This is volume imbalance. I expect this one to be breakaway gaps. The only favor gap that I'm giving is this one because of this volume imbalance, but the rest I want them to be a breakaway gap. Since the market have gone that far, I can put my stop loss just there. That's 10 plus 15. 10 plus 15, that's 25 risk. And my first, I want to take my first partial at this loss, I think. Not there. $50. Yeah, just put there my first what? I want to put my first partial there, and then the rest I'll let it run, because the moment market will take this low, I put my stop loss above here. So that'll be additional for me. For now, I expect the market to come until there, until this low be taken, this swing low, this is a liquidity, this time distortion that's doing here, that is being done here. If you check EURUSD, same, a good partial, that's an entry position. Market displacing down, going down, breakaway gap. In fact, that's a good entry position. This was time distortion. All these. Yeah, that's what time distortion. I would love this swing low to be taken. So if this swing low will be taken, that one will be a very good shift market structure, because this should be a breaker, high low, high high, down close candle. You use that inversion fair value gap to support market to go down. So if I take that inversion fair value gap, I just want to see if the market still, you can see the premise of this fair value gap, it have closed below. That's showing that it's have already used as an inversion, not a fair value gap that support market to go high. That's a good one. So I expect this candle, this other 15-minute candle, to rally until take this swing low, to form a shift market structure that will come, market can retrace back and then continue going down. That's what I'm expecting. Let me go back. This one is what I'm saying, this 15 minutes. Let me go back. This one, you can see how the candle just opened below, around, it's exactly below the fair value gap. The high of this of this candle is 32 ishaingia ndani, so that's nothing. So I expected itakuwa below the support kuna chini, so I expect the market just come to encroachment maybe and then continue going down. Just put my stop loss there. Let me go in 1 minute to place my stop loss well. Remember there's a volume imbalance there, so the market is allowed to do that. Yeah, volume imbalance have been touched there. You can see volume balance have been touched there. I don't expect a body to close above the volume balance. I don't expect it. Yeah, that's a good one. If they just can now come, if the price can just come now, use the conclusion of this week, touch here and then go down, that will be a good one. Even low quadrant, I'm okay with that. That is a good one. But let me see how the body is going to close. That's a good one for me. That's a good displacement. Using the Costco encroachment, you just one handle past it. Now I want this swing low to be taken that way. If this one can be taken that way, now I can confidently put my stop loss just here at the first quadrant there of that week. That's a good one. Close just below here. That's a good one for me, because I don't expect now this swing high to be taken again, because this should be a displacement high down. It's just in case market could just that swing high, it will mean that you are going to take this buffer liquidity, and I don't want that one to happen, because we have a very small session liquidity that is here. Yeah, so now we have just, I want this one to be taken now. Just let me remove this one. This one should be taken now at the moment. My first partial. The first partial should be taken now. Just waiting, because we have already dealt with this volume balance that I've told you guys, this volume balance, and now we displaced lower, taking this swing low, and I never want market to come back here, so I can just trade my stop loss then again, because the body have closed below the swing low. That's 10 plus 16. I want my first partial to be taken, just like small, something small for it to be taken. Imeguza tu exactly. So I expect the next candle to come use this volume balance that is here, and then displace lower, or this one can just use pia inaenda tu ndani ingie tu like ikiwa imeendanga. Ishachukua guy, that's a spread. Now that's the issue of spread. Spread imefanya sijachukuliwa. If you just reverse this video, you see this one ilifika 50 but haikuchukua. Here is spread. Remember, this is live. This is a live market. A live. So this volume balance, if it can be used to displace this with a body, this is a liquidity. This one with a body, that would be a good one for me. Sahi nachukuliwa tu sahi 48. I'm looking at this one for 7. Mechukuliwa. You can see here. My first contract out $50. Now I'm going to consider, I put my stop loss there at profit of 19. That one will be good for me. Already paid myself. The market is coming back to its volume balance again. May displace lower.